what is the best time frames because that you can use? Because you're the first person I've ever seen look at an 8-hour chart, a 3-hour chart, all these strange hour,
Uh-huh.
and minute charts. What would you say is the best chart? What's your kind of go-to? Welcome to the Trader Society podcast. Grant Hardy, we got Derek Vandy, and we got another one. What episode is this now?
This is episode 9.
9. Wow, we're rolling through them.
And we're making it happen.
Getting better and better each time.
Yes, sir.
So today, we want to talk a little bit about trade setups and what we look for in the market specifically, and how we go about looking for them, how many trades we're taking, and so on and so on. So you kind of want to get us into that? And
yeah, we were kind of talking about where we started and where we're at now. Now, for me, I was a scalper, and I still think that I am a scalper at heart. But when I started the first 5 years, I stuck to one pair, GBP, JPY. And if you guys know, my favorite trade setup is the shark fin, and I used to just trade shark fins on GBP, JPY. And I crushed it, at least 2 through 5 scalping. Absolutely crushed it. Went through some life stuff and then kind of took a little bit of time off of actually trading, was still looking at the markets, but overall, scalper was what I was doing. And then I really dove into technical analysis within how I trade. And if any of you guys have followed me, you guys know that I trade 3 setups. I trade a specific divergence, a specific shark fin pattern that you guys can find on my YouTube, and then as well as a hidden divergence. But that's where I am at. Where did you start out, Grant?
I started out just trying to learn structure. I would look at every pair. I would try to trade everything. I definitely should have consolidated what pairs or indexes or commodity I was trading down to like 2 or 3, because I think too much information can be completely distracting. Especially like you're in AUD JPY buys, right? But then you're in you're in GJ sells or something, like it doesn't.
Yeah.
So like consolidating it is something I should have done in the beginning, but mainly just learning structure, trying to identify structure, trend lines. Like honestly, it wasn't even until I think I watched one of your videos, or maybe I saw you on a live, or I saw a video of you, but you were talking about trend lines, and you were like, yeah, I'll draw a trend line through this part of the structure before, like if there was a breakthrough and then it went back up into the trend line, like I would just stop it there, and it's just something that simple things like that you don't know, or you learn, or as time goes on, but mainly just structure. Definitely. In the beginning.
I love that, man. See, I am a huge advocate of inverted trend lines, meaning it goes through the market in a specific way. And actually, I just posted a reel today about that inverted trend line that I do take advantage of quite a bit. I would say that I draw trend lines in a very specific way. I will eventually be posting a video about how I do draw trend lines, because I feel like it's a little bit more unique than most people do. But yeah, man, I think trading, when you're starting out, if I was going to start out right now, this is what I would do. I would focus on one pair, master that pair, master a specific strategy, wherever you learn it, just make sure that it works over time. And for me, that was scalping, how I scalped. And ultimately, I did the same thing over and over and over again, and I would win. I'm telling you, like, I think I had a record of like 90-some trades in a row.
That's insane.
And granted, when I look back and I'm like, how did I do that so well? Like, there was definitely times where like I would hold drawdown, let it come back, and I'd close out with a small win, which is not how I do it now. I take the small loss and Just look for my next trade.
That screwed me before.
Yeah, exactly. And it will
eventually that will get you.
Yes.
Yeah.
That will 100% get you if you do it over and over again. You can get lucky every once in a while, but that's why I firmly do not believe in not having a stop loss. I think stop loss is mandatory. For the fact, like, if you're in a trade and it goes against you, it goes against your analysis, like, just get out of that trade and just wait for that next one. But I wanted to go over, like, when you're trading, like, I want you to explain, like, the things that you're looking for when you're trading.
So typically I like to see, some sort of structure where they're usually like a few points of structure, right? So let's just say one of the pairs are selling, right? I like to see it hit the trend line, hit structure that hit above it on a retest, with divergence, and then some moving averages, at least like on the hour, 4 hour, whether that's the 800, the 50, or in the 200, right? That's the only three that really we all use. And, as long as it's off of one of those, I can typically justify taking that trade. Sometimes like I'll do something, a smaller position on something riskier. I'm like, okay, I think this is going to buy at this point, or, reverse off some double top or something. But typically I like a retest of structure. Now, if you can do that, and you also have some sort of head and shoulders pattern with the divergence of moving averages, then, I'll go in a little bit heavier. But typically, like, I'll trade with a fixed lot size and look for just that. And two, right, like, the market right now, I feel like if you go into the hour, just buy or sell with the trend on whatever pair you're on. When it hits that trend line, especially like on GJ, UJ, like
JPY pairs.
Yeah, like I don't know why none of us are only just sticking to those.
Right. I know, it's kind of crazy. I've been calling JPY, XXX JPY long for the longest time now. And I have not really necessarily taken advantage of it. I caught a beautiful AUD JPY sell last night, actually. I had it marked up on our live chat where I wanted it to go. It was right on a beautiful resistance level. And ultimately, I saw the pattern that I was looking for. Beautiful shark fin. Had a massive spike up. I hit it. I think I got maybe 2 pips of drawdown, and the thing just dropped 100 pips on me, which is what I was obviously looking for. No, it was great. It happened too fast. I was looking at my phone, actually. It was happening too fast to even be able to call it in the chat, because it was like kind of just chilling, working its way, and all of a sudden just like a 35, 40 pip spike up.
Right.
And I was like, oh, this is it.
That's the thing when the market's moving. Like, a lot of times on our lives, like I called buys on GJ the other night, and I think most people that took the trade, like, they should have made money.
Oh yeah.
And but the thing is like, by the time you copy paste your chart in the chat, and then you're typing out entry, stop loss, like, it's moved so quick now it's too late. So like you can get a lot of value through that live session being right there at the computer, versus like sometimes we'll call a trade after market open at 5 o'clock or whatever, 6 o'clock. So it's where you catch it too that I've learned.
I think the lives are definitely slept on, because I've probably called in the last 2 months probably 10, 15 trades on the live, and I'm pretty sure every one of those trades has ended up being a winner.
Right.
And I typically, I'm very disciplined in my trading, so I will only call trades that I have a very good inclination that it is going to work out. But like you said, it's hard to manage the lives and then post it in the chat. But overall, it's it is difficult to do that.
It depends too, like if you're scalping intraday, whatever. Exactly. And usually the lives are pretty, the time frames are lower.
Yeah, and one of the things that I do on the lives is like I can pick out areas where the market's going to head to. I'll put a alert on TradingView and then wait for it to alert me. I'll look at it, And if there is one of my setups, I will definitely take advantage of that. But I think the alerts on TradingView are absolutely wonderful as far as like it will beep on my phone. I'll look at the chart and just take advantage of that. And that's one of the things that I do on the lives as well. Is like, I'm like, all right, set an alert for here. And when it comes up to this level, if it has one of the patterns that I trade, then ultimately make that decision to see if you like it as well and take advantage
Maybe
of that.
That's something we should do, is do like a free on TradingView on how to set alerts.
Definitely.
I think that's a really good idea.
Oh yeah.
So can you give a brief explanation for those who don't know what shark fin is?
Okay, so I absolutely love the TDI, the Trader Dynamic Index. What it consists of is the Bollinger Bands on the lower part of the chart, and then it has an RSI as well. That's really all I use with it. So what happens is the RSI pops out of the Bollinger Bands on a significant area, very big in confluence on the chart. Like if there's a shark fin with confluence, whether it's supply, demand, support, resistance, trend line, I will absolutely take that trade 9 times out of 10, unless I just see that this trend is like far too powerful. But that is essentially what the shark fin is. Again, you guys can go to my YouTube, watch the shark fin video. Very simple strategy if you're using it with confluence. And another thing, like in these trending moves, you'll see a lot of pullbacks into the 50 moving average. That's my probably my favorite trade setup as far as risk to reward. You can always get like a 1 to 4 risk reward on those. And the good thing about that is you have that area on the 50 moving average where it's like, all right, is it making hidden divergence? And if you don't know what hidden divergence is, make sure that you figure it out, because it's a very beautiful technique to use when you're trading with a trend, because it's a trending indicator that the market's going to continue
buying or selling.
Yes. Right. Yeah, exactly. So
think of it as like a rubber band, right? So you have your trend, and then it comes back to your trend line, and that divergence is just an extra indication that it needs to come back up.
Exactly.
Does that make sense?
Yeah, no, definitely. I love that. And then, so for me, if anyone's seen the way that I trade, I also have Bollinger Bands on my actual chart. I think it's a huge plus if you know how to use them, because you can indicate where, just by the pattern of the actual Bollinger Bands on your chart, you can indicate maybe there's a huge supply zone, and the Bollinger Bands are lined up with that supply zone. If you can put those two together and you have some form of confluence within that, it's a very good indication that trade will play out. And another, like, all this is all, you can find this on my YouTube, like how to use this stuff, but a lot of people get that like sense, you have a lot of people in this industry that says, oh, you don't trade with indicators and whatnot. But like, I think that's so bogus, because I've been trading,
the whole naked charts thing.
Yeah, which is fine. Like, you can easily do supply demand zones, and like, there's so many different strategies. But at the same time, like, if you find something that absolutely works over and over again, and you can like utilize it for yourself, like, there's no problem with having indicators on your chart.
Like, go into GJ on the hour time frame right now. It's just buying off the hour 50.
Exactly.
Like, if it works and it's there, it's, it helps.
Exactly.
I don't trade with naked charts.
Yeah.
Yeah.
No, but you like you said on the last podcast, actually, we all trade pretty dang similar. Mm-hmm. I maybe have like a little bit more tools as far as the Bollinger Bands, but I've also been doing that for 6 or 7 years now. So I know how Bollinger Bands work, and if you study them well enough, again, like, I have specific settings that I use on my Bollinger Bands, but if you study them well enough, you can see the patterns that play out off of these Bollinger Bands. And that's just, I'll put them on my chart, and then I'll take them off just to clear the clutter. But ultimately, just another tool I have in my belt to help me identify trades that will possibly work out. And that's actually how I caught that AUD JPY.
Right.
because it came up on the daily, hit the top Bollinger Bands. Bands were wide, flat, and ultimately gave me a nice 100 pip move off of that zone.
Right. So I have a question for you, and I've seen this. I've been asked this question. I've seen it been asked many a times. What is the best time frames that you can use? Because you're the first person I've ever seen look at an 8-hour chart, a 3-hour chart, all these strange hour, and minute charts. What would you say is the best chart? What's your kind of go-to?
So I do a top-down analysis. I go from the weekly on down. But and like you said, I have the 12-hour, 8-hour, 6-hour, 5-hour. The only reason I do that is because of the actual patterns of the Bollinger Bands. And as well, sometimes it will give me hidden divergence on the maybe the 6-hour and a nice area of structure. And so that's why I utilize more than one time frame. Because for me, like I like getting in trades that I feel like I know I'm going to win. But ultimately, I think my favorite time frame is actually the 4-hour.
Yeah,
I love the 4-hour. I love the 4-hour, 1 hour. And then if I'm gonna do a lower time frame, I'm definitely gonna be on the 15-minute chart.
15. I don't like the 30.
Yeah, I never really look at the 30.
It's weird.
It seems like it doesn't. I don't know. Not that it doesn't work, but it's just like I catch more moves on the 15.
15's a little more accurate, I think.
Yeah, definitely. I like that. What's your favorite time frame?
Lately, the hour and 15 and 4 for sure. Like I'll look at the daily just to kind of see the overall trend, and then 4-hour things start getting more detailed. And then lately I've noticed, on certain pairs, just the hour is so trending, and you can just buy or sell with it.
Oh yeah.
But that doesn't mean that just because that happens, right? So I'm going to give an example. So on that live the other night, right, I wanted to call it in the group, but I didn't. I called online. I'm like, look, this is probably going to keep buying. But the reason I didn't is because, sometimes that hour chart can be a little deceiving.
Definitely.
Because, you look at the 4-hour and you have these big wicks that shoot down. And the reason I didn't take the trade is because we broke out of this trend line and we were retesting it. And I was like, but this divergence and there's so much upward momentum is probably going to keep going. And the reason I didn't take it, and there was one dude, he made, I don't know, he made some good profit. He dropped 2 standards on it and he caught 60 pips, in the matter of, 45 minutes, 30 minutes. And so my thing is okay, well, looking back now, yeah, the 4-hour, it just sent a wick down and kept buying. But the hour was I don't want to get in this trade because this looks like it could just fall from here on this retest. So, structure breaks and retest aren't the end all be all. One thing I like to look for with that is moving averages or a setup with the head and shoulders, to sell or buy again. So there's got to be some other confluent factor, before I'm like, yeah, I want to hop into this.
I think moving averages are so slept on.
Oh, for sure.
It's been one of my rules. I typically will try to get my entries off of moving averages. That's whether it's on the 6-hour time frame or the 30. Yeah, right. That's what you're saying. The 1 hour and the 4-hour. Right. I have the 2-hour and the 3-hour on my chart because I feel like when you go from the 1 to the 4, there's too much space in between. So I do I've caught entries on the 3-hour. I've caught entries on the 2-hour. I don't like that gap from the 1 hour to the 4-hour. Right. So that's why I do utilize. But ultimately, you can also get yourself caught up in that situation of looking at too much stuff.
I was about to say I would overanalyze and overthink. Less is more for me.
Yes. And that's why because I know exactly what I'm looking for. So if it's happening on the 3-hour or 2-hour, and as long as the Bollinger Bands or the TDI looks how I want it to look, then I know what I'm looking for. So I've actually gotten a lot better at not over analyzing it and just looking for what I want to see.
Right.
And I think that's really helped me out a lot. Instead of looking at the 15-minute chart and then looking at the 6-hour and be like, well, the 6-hour is telling me something different than the 15. Right.
Right.
So if you can take advantage of more time frames, do it, but you also have to have to know what you're looking for.
Right.
but that's typically what I'm doing. But like I said, Confluence, it doesn't even have to have the TDI on it. If you have something that makes sense and there's more, I like to shoot for at least 3 or 4 Confluent events in my trade setup.
Right.
And if that happens, then it will usually work out.
Right. As long as that R to R is there.
Exactly. The risk reward's got to be there.
Right.
What is the lowest risk reward you'll use?
If the stop loss is tight enough, I'll go to 2 to 1.
Yeah, okay.
If okay, I know I can exit and lose, 10 or 15 pips, sure, I'll take the risk.
Mm-hmm.
But, if it's like, okay, I could go into 180 pips and draw down, but I could make, that, like, I don't typically take that. So I kind of stay away from those.
Yeah, that's another one of my big things is like, I don't like going into drawdown.
It's stressful.
Yeah, it definitely can be very stressful. So the trades that I do take, I definitely want to have a good chance of not having much drawdown.
Mm-hmm.
I take pride in like having like really good entries, those snipers, where you can put so that's the thing with me. Like when I get my entry, it'll usually go in profit pretty quick. And then that first area of Confluence that would go against me, I'll have my stop loss in profit, just like you did last week with oil.
Mm-hmm.
You got some great entries. It ended up hitting your stop and profit. And I think that's so important for at least me.
Right.
And, it just saves.
And for everyone that's like taking our calls. Like,
yes.
Yeah.
Exactly. Like if you're in a good amount of profit and there's Confluence that could go against you, like definitely should have your stop loss in profit because ultimately.
And like looking back now, like, lower time frame, at least on one of the calls I made, there was a double bottom and it shot back up, and just because what you see doesn't mean that that's what's going to happen.
Exactly.
You have to be willing to constantly adjust.
Mm-hmm. Now, do you use supply and demand, or do you just kind of mainly use? I mean, support and resistance kind of like the same thing as supply and demand, just
right?
A little bit different, I guess. But
I've been trying to understand supply and demand more as of recently, but typically, support, resistance, structure, trend lines. I kind of combine. But like lately, I've been trying to understand it more and look for it and see it, and like, oh, okay, well, we broke out here and we need to buy up to this zone here. You know what I mean? So, or sell off, so I've definitely been trying to incorporate it more, and yeah, that's just trying to get there.
That's the thing with, like, right now, I'm in this phase where I'm like, you know what? I don't know enough about what I'm doing. As far as, like, fundamentally, I want to be able to look at the charts, being able to look at the news, and, like, have a better understanding.
Do you look at news?
That's where I'm getting into that. Like, I'm actually going to be taking a course right now. I think that if you guys want to learn more, I think that, like, I'm always willing to learn. I'm never going to be too good to learn from somebody that knows more than me about a specific thing.
Right. Just because you trade and you're profitable and you make money consistently doesn't mean that you know everything.
Exactly.
Like you can still constantly learn things, and that's okay to admit.
Exactly. So I'm going to be taking advantage of, like, using those things, learning different things better, so I have a better understanding, not only for myself, but so that I have more of an understanding to be able to tell you guys about it and feel good about telling you guys about it. And ultimately, that's like a big thing for me is I want to know absolutely everything that I can know and get better at trading, because there's people that do it way better than me that you don't even know. And that's where I want to be. Like,
yeah, how many people are in their basements or, just sitting some high rise making millions of dollars a week trading?
Right.
They're not on social media. They're not, where did they learn from? How did they learn?
Exactly. That's where I want to be. I'd rather be 10 years from now just pressing a button making $1 million in a day.
Yeah.
Yeah.
And
that there's no doubt that I'll get there, but, like, I got to step my game up too,
Right. And it all comes from the knowledge that you're putting in your head.
Exactly. And, taking the time, back test. I know you said that you don't necessarily back test. But for me, I've spent so much time back testing just in my early years. I haven't really done it a whole lot in my last 2 years trading. But I want to utilize back testing better. Like I could spend more times on the charts, going over things that would help me ultimately. I never want to be that person that thinks that I know everything.
Right. No, I think the next thing I'm going to do is, now that I'm where I'm at in my trading career journey, right? I need to hook up an account now to my FX book.
Yes.
And really dive into the analytics and see what I can work on. Am I over trading? Am I, is it just bad entries? Are the trades right? Because I've already started trying more practice what I preach to everyone, out here. Like if I get out, I walk away, I don't look at the charts. If this is the trade I'm taking, I'm trying to stick to it and really practice what I preach, because I don't want to be, a hypocrite. And then, next thing I know, I'm blowing all these accounts and whatever, right? But I think that's the next thing that I'm going to do here soon is hook up an account to really like dive in and fine tune and see where I'm actually really at. And I think that's maybe hard for a lot of people to be able to do, is like, oh, hey, I'm this trader, I'm doing this, I'm made this amount of money. But it's like, have you really looked at yourself in the mirror, so to speak? And I think that's the next thing that I'm going to do, and I'm going to, be transparent about it. It's a little nerve-wracking too.
Well, I actually learned this new statistic. I was talking to a guy that's very high up in a broker in London, actually, and I can't say the broker's name, but he was telling me that under 1% of people are profitable. And that's why I freaking preach what I preach. I've been profitable the last 6 years, 5.5, 6 years, around there. And the only reason is because for me, and I know this because I've been very disciplined in how I trade. I only trade my specific setups. And I think there is so much of people learning from this guy, and trying to like add all this together.
Keep it simple.
And you got to keep it simple and just have your specific trade setups that you like or that what works for you, and just rock with it. Because when you're learning all these different things, like it's just going in and out. And even I'm going to call some people out in like even our chat room. They're like looking for 25 different trades. And it's like, you don't need that many trades to be a successful trader. And ultimately, I think the more you trade,
the worse off
you're going to be.
Right. And maybe unless you're like scalping and I don't know.
But
I'm not a scalper. Like
even when I was scalping, I was using one pair. Right. And I think that's what benefited me. Like a lot of people just want to be in 25 different pairs looking at
when's the next signal.
Yeah.
I don't know when the market presents it.
Yes.
Like we react. We don't, like, if you try and force it, you're in the wrong industry.
Yes. And that's something like I always know where I'm waiting for the market to go to before I'm going to enter a trade.
Right.
Like, or at least like I want to see it go there, and then I can analyze it at that point.
Patience.
Waiting there and waiting for the trade to come to you so you can react to it. If you like it when it comes to you, then you can take advantage.
Right. Love that.
And you've done an actual incredible job. I love watching you trade because you see things a little bit differently than I see. I know that you take similar setups as me. But at the same time, your trades are working, and it's like, oh, I wouldn't take that, but you're taking them, and it's working for you, which is another proven fact that
if
it works, man. Like different things work.
Yeah. As long as, I think there's like a simple basis point where if you follow it, it works. But, there's always room for improvement, number one. And, there's always some other strategy out there that someone's probably got a secret. Like they're just holding it to themselves.
Right? Gosh.
Well, that concludes this episode of the Trader Society podcast. Let us know what you think. Remember to like, subscribe, hit that notification bell, and we're going to see you guys next week.